What's up, everybody? It's John with Prime Home Solutions, and thank you for subscribing to our Prime newsletter and checking out our market updates. Um, I know a lot of people see me throughout San Antonio giving this presentation at the Ala Maria, and just so if you're watching this video and you attend the Ala Maria, it's going to be the same exact presentation, but this in November, uh, or the Stepstone Mastermind that I present at as well. But let's get started with this. So our September number overview, and this information is provided directly from Sabor. The average sales price was 242,870, which was a 9% increase year over year. That's what, anytime you see this YOY, that's what it stands for. Now, I don't like using the average sales price to really show a picture of the health of the real estate market, what price is really doing, because if big house sells, then it can fluctuate that price too much. I prefer using the median sales price to really kind of see where the middle houses are being sold. So in September, it was 191,000, which was a 5% increase year over year. Total sales 2608, which was a 9% increase year over year. Average rental price was 1428, which was a 7% year over year. Now I like to plot the median sales price on a graph so that everybody can kind of see how the cycles go, see when you're going to get the best prices for your homes if you're doing flips, or in the next slide is with rentals as well. So you can see that this is the bottom of the last real estate crash. You have our peak of the market here, 1, 2, 3, 4, 5. So we have been consistently going up for an extended period of time, and we have seen a pretty sharp drop off here from the summer months, which doesn't quite what it always does. Usually it's a little more smooth. You won't see quite the price drop, so it's going to be something we're going to be watching as we're moving into these new elections and to our 6th year of being in an up market, to see how the market adjusts, if it keeps going up or if we have a correction. Same thing with the rents here. I mean, no surprise, the best time you're going to get your rents for the highest amount is going to be your summertime. So keep that in mind if you're trying to go for rentals. What concerns me a little bit is why we saw such a huge price jump, and then it fell off, and then it planed out a little bit, and now it's dropping again. It's not that consistent, smooth curve like we've seen over the last couple of years in the cycle. So another thing we're going to be kind of watching and monitoring over the coming months. Now, employment rates. I like to pull some of the freshest data I can find, but the data is only as reliable as the websites give, and I pull this straight from Texas A&M Real Estate Center and the Bureau of Labor Statistics, and neither one of those sites have updated their employment and unemployment rates since August. So I'm going to just kind of run with those numbers. But so here's your employment rates, and this is for the San Antonio, New Braunfels area combined. We had just over 1 million jobs, which is a 2.13% increase from last year, but it was an 8,346 decrease since the all-time high set in May of this year. So even though we're up from the amount of jobs we have, we are losing jobs, which this is the second straight month in a row from when I first did this presentation that jobs had dropped. Unemployment was at a 4.1, which is a 0.23% increase year over year. Now remember, this increase is bad when we're talking about the unemployment rates. So this is the second straight year over year increase since September 2011. It's something to be watching. And it's a 0.71% increase since a 16-year low set in April of 2016. So which is right around this time that we hit our peak for our employment rates. So we have seems like we've hit a shelf and we're dropping back down. So hopefully by next month they will have out the September, October, November, probably not November, but have 2 more months of unemployment rates that we can really see are we taking back up and losing more jobs, or was it just a little blip in the cycle to make things change? So you can see the 20-year unemployment. And what I really look at here is, like, you can see our last 2 crashes that we've had. Here's your .com bubble right here, and then here's our real estate bubble right here. Now I'm looking more at the length of time that we've had between these crashes from when these market cycles started coming back. So we're about the same length of time between these two crashes before we see another market cycle or big correction or something like that in the market. Now, this is what I was saying of if we're going to be monitoring if this was just another blip in the cycle, or are we actually trending back up? Is because you see down here at the bottom, we always bounce around at the bottom before we hit into a next recession. It's happened the last two cycles, and I'm sure it's going to happen again. But so looking at this, you can tell we've been bouncing around here for the bottom. So that's why I'm really curious to see what the 2 months of unemployment data that I'm missing, to see if we're still bouncing around here at the bottom or if we are starting to trend back up. One thing I'm adding to this, like I said last month, I'm trying to expand this and give more information, more data to everybody. So one thing I am doing is posting the foreclosure numbers every month. So in November auction, there was 446 posted, which was a 3% change versus last month. So I'm going to include this every single month. And now sold at auction was only 89. I know a lot of you said that, I mean, it sounds shocking to you that almost 450 get posted and only 89 sell. I called and was asking information, and they said what has been happening is the banks have been approving modifications more and more and more successfully. So that is why those numbers are declining like that. Hopefully this next month I have been in contact with some people to see if I can get the backdated foreclosure postings and sold rates dating back to I think 2005 or 2004, so we can see these things on a graph, just like we did with the unemployment and the employment rates, to see in our market cycles when things start trending back up as our early indicators of market cycle corrections and what's going on in the market. Now, another thing I'm adding is the Dallas Federal Reserve puts out a news report about the economy every single month. So it's not the same information every single month, but there are a few good things in there. So I'm going to include some of those graphs and charts and articles in here as well. And one thing I saw from this month was talking about the oil rigs in relation to job creation and job growth here in Texas as a whole and San Antonio. So now, green line here is the Eagle Ford rig count, and this is where you can see where our oil prices, energy really started dropping here. And you can see this is Texas, and this is San Antonio. What I took away from this is I've always heard since I've been here that San Antonio is dependent on oil a lot in the oil market. Well, looking at this information, it's kind of interpret this as the rig count dropped. Yes, we did have a pull down, but Texas as a general had a bigger pull down than just San Antonio, which tells me we have a more diversified economy than what the overall state of Texas has, since we did not drop as far. Now, everyone knows that San Antonio, compared to the other major cities in Texas, is the one they say is the most affordable. Now, I'm looking at this information, and these are the hourly wages. So, U.S. 25.69, Texas 24.59, but San Antonio, you can see, has started to trend back up. It is getting more expensive, and it tells me that since we have been seeing a housing boom here and the price is really going up, and some people have been wondering if we're kind of getting into a bit of a bubble. This is kind of telling me that, hey, our wages are increasing with the prices, and even though Texas is planning out, San Antonio is going up. So with our job creations, it means we're adding more higher paid jobs than some of the other places. Now, for our next month edition, one thing I want to do, like I mentioned, was the foreclosure information backdated for the posted results and the sold results, so we can kind of monitor that and see what that looks like over time. The average sales price, like I mentioned at the start of this, the average sales price really isn't something that I use to determine too much information from, but what I want to do where the average price does make sense to me is breaking it down by price range. So basically everything from 100 to 150, 150 to 200, 200 to 250, and so on and so forth. So we can see if the average price as a whole is increasing, it's like, where are those homes selling? So if it's in the higher price range, we know that those prices, that's what's making that price go up. So if we monitor at smaller areas, we can see where our prices are going up, where they're going down, and where our houses are being sold. Another thing I would like to include is more information on the Texas economy as a whole, not so much just focus on San Antonio. That was still going to be our primary focus, but I want to show everything that's going on in Texas as general, just so we can see like, hey, this is how the entire state's performing. This is what San Antonio is doing. So we can kind of use that for our analysis. So thank you guys for tuning in and paying attention. If check out our blog, we've written a couple good blog posts this last month about contractors and then the cost of funding your retirement and stuff like this. Head over to our Facebook page to like us to get information that we post there. And if you guys have any questions, comments, have any suggestions, information that you would like to see included on this, please feel free to reach out to me. There's my email address is john@prymehomesolutions.com. And I appreciate you guys for subscribing to our newsletter, and we will see you guys next month.